Hi everyone, we are all set to begin the meeting. Good evening, everyone, and we truly appreciate you being here because at Luxury Time, we know every second counts. Welcome to the investor meet of Luxury Time Limited. I am Rachika Shah from Equiprojects, and it's a pleasure to be your host. Luxury Time Limited is India's exclusive authorized partner for leading Swiss luxury timepieces operating an integrated B2B, D2C, e-commerce and after-sales model across 70 plus nationwide touchpoints. The company has consistently delivered strong financial performance supported by a robust balance sheet. With India's millionaire households expected to double by 2035 and rising disposable incomes driving premium consumption, Luxury Time is strategically positioned to capture this demand through its exclusive brand partnerships and nationwide service ecosystem. Today's session will give you a meaningful insights into Luxury Time's growth journey and strategic roadmap. We are honored to be joined by Mr. Ashok Goel, promoter and managing director, Mr. Masha Goel, director, Ms. Kanika Gupta, CFO, Mr. Pawan Chauhan, promoter and director, and Mr. Yash Jain from GYR Capital Advisor Private Limited Merchant Bank. So let me quickly walk you through today's flow. We will start with a short introduction about the company and presentation delivered by the senior leaders of Luxury Time. This will be followed by a question and answer session where our leadership team look forward to addressing your questions. Thank you, and I'll now pass it on to Mr. Ashok to begin the discussion. Over to you, sir.
Thank you. Thank you, everyone. And welcome to this session. And through the session, I would like to take you through who we are and what we intend to do in future so that there's a total transparency and I have more people believing in my project that we are set aside for our future. So let me just begin about talk about myself, my team members. We are hardcore brand marketer people and specializing in luxury and tech world. So in luxury, we deliver end-to-end business solutions in this, which is from distribution to after-sales service to providing tools to providing marketing support to and so in distribution, it's not just B2B, but we also have authorized e-commerce platform for Tag Heuer, Bamberg, and some of the other new emerging brands. So I would like to take all of you through and all of us through a short presentation that we have. So let me know if the screens are visible, and then I'll continue. So, okay. Uh, as you can see in the screen, it's mostly about our
Sir,
principal
sorry
brand.
to interrupt. Your screen is not visible.
No, uh, just a second. Let me share my screen. Is it visible now?
Yeah, perfect.
Perfect, perfect. Great. So let me begin by talking about it that our experience goes in luxury watches goes beyond the incorporation of luxury time. It actually started in 1998 with the launch of today's most established brands and today's most established listed company that you are aware of. Well, no second guessing, Ethos is the one. And I launched it. I was instrumental being a part of the management and launching it. And then moving on, as and when we started getting more and more interest from brands of the world to provide services for them in India to create a launch pad. So in 2006, we launched Hublot. In 2014, we launched Zenith before LVMH, which was operating a subsidiary in India. They decided to hand over the rest of the brands to us to market in India, and they exited from India market. Perhaps they couldn't do what we have been doing since day one. which is making profits from the brand called Tag Heuer. So we started, our job was simple. At that time, there were more than 129 stores in India, and we cleaned up the market over the last decade. And so much so that the result is that we are poised for a giant leap from here, so that we can expand with a higher average selling point for the product, so as to benefit from the market, that all the hard work that we have put in so far. So just to take you through uh, a brief synopsis: established in 2008, Delhi is our headquarters. Delhi also happens to be the largest market in luxury. Um, we have fully integrated verticals. That means it's not just selling the watches to our partners to their stores in India, but also direct to consumers. So we have the authorized e-commerce platform for Tag Heuer, Bomberg, Exacquo, and more brands to come. After sales service, which started in 2017, principally by with along with Tag Heuer, more brands came on board, and so we, besides our own service centers, we also authorize 13 to 14 more service centers for different brands, so that they can provide, our brands get a proper service across India. Branding, PR, marketing. So that's the additional support that we provide, because we are hardcore marketing people. And since last year, we have also become the exclusive distributors of world market brands in the field of tools and machinery. Uh, just to give you an example, these are not regular tools. These are the tools used specifically for watch repairing, watch assembly. A case in point example I can give you is that if Titan were to buy these tools in India, they will have to go through us. Nationwide presence across all the brands that we represent, 70 plus retail stores that we supply to, which are going to increase from here. And our aim is to be present only in quality stores. So as the retail stores grow, we grow with them. Two flagship service centers. Uh, 2 months ago, we opened our service center in Mumbai as well, and that's in the primest of the location that one can think of. In Delhi, we have more and more of associations, and the our business revenue comes from providing services through our partner retail stores, because the watches get collected over there. The aim is to reach out to the customer directly, and that's why we have opened in Mumbai in the primest area, so that more direct to customer services can be provided. So naturally, it has a higher profit margin. Uh, a proof, as they call it. I'm not very familiar with the startup languages and everything, but a proof of our expertise can be seen that you know when it was a opportune moment for a another listed company to have a association. They chose us as their partner, and and uh, and uh, and that's when the joint ventures were formed in retail, which is for monobrand store Hublot, as well as in service centers. And now we have also we are the authorized distributors and exclusive distributors for world leaders in their machine tools, Burgio and Horotech. Some of the milestones, uh, I've explained that to you, but important one is what you see in 2024. That's interesting. When we took over, the average selling price, the MRP of Tag Heuer watch was 1.75 lakhs per watch. Today, we are at 3 lakhs per watch. So you can understand, despite cleaning the market, reducing the stores, the non-performing stores, we retained and we only grew from there. Imagine what's going to happen when we start expanding at 3 lakh rupees per watch. Well, your guess is as good as mine. So, with the increasing investment in tools, expansion in service center, the new joint venture being operational from this very financial year, uh, the revenues are going to grow. Some of the accreditations, the service centers The most important aspect is the training of and accreditation of our principal service technicians. And you can see from the certificates, the Hublot, Gucci, etc. I mean, there are so many of them. Our quick review on our managerial team: hands-on person with his special hairstyle, Ashok Goyal. Pawan Chauhan, my whole-time director, Masha. He is independent director and executive director, and sorry, executive director, and Nanika and Sonali. They are our key custodians so that we do the business in a most proper manner. Besides Kanika, who joins us in this forum, she is the CFO. Something about us, I've spoken about it. Now I can talk about it in detail. Watches, yes, that's the first love. That's a starting point, and rest all follow after watches. That means a product is not complete till the time you have a proper service. So for a service, you need to have right tools. Uh, for to be able to use the right tools, you need to have right technicians and trained people, manpower. In this today's world, like how most of the industries are grappling with, sometimes the youth are not inclined to come into the industry. So therefore, we have taken upon ourselves to train them and provide them job. So skilling is done on the job in our service centers, in our systems. Processes defined by us and as per the guidelines of the brand, and they get certified so they can go out, get a job, we can get them a job, or we can absorb them. Tools, of course, the best tools are needed to provide the fine servicing, and so we invest in it. Besides that, of course, the PR and marketing is another aspect of us. And now we are looking for expanding the fourth quadrant of a business, which is going to be the retail store. So that's what we call it, a uh, addition, another pillar in our business. Just to familiarize you, I'm sure all of you love watches. I'm I'm 100% sure some of you are budding collectors. But just to give an idea, a starting block of 2 lakh, 2 lakh 10,000 rupees on extreme left to higher of 1.65 crores. That's what Tag Heuer represents. Zenith can start from 5 lakh rupees, can go up to 85 lakh rupees or 1 crore. In this case, we are showing you a watch which is roughly around 52 lakhs. Bomberg, which is exclusive distribution with us, and a new brand, is a micro brand, and the range is from 1 lakhs to 3.5 lakh rupees. This is the latest one that we have, a melting watch with authorized approvals uh, uh, from the artist foundation. So these are from 55,000 rupees to upwards of 75,000 rupees. More to add, more to come. Some of the businesses, watch distribution, direct to customer business, which is through the website, after sales services, tools and machinery, and brand marketing. These are the five uh, contributors in our business currently. This is how our website looks. Some of the service center in Mumbai and Delhi, how they look. You can see they're full of tools and proper systems. We like to call them as watch clinics because we feel that the technicians who perform the services on your watches, they are like a surgeon or a doctor, under the microscope, healing your watches. Tools, some of the events that we have done, and this is for the Hublot when the CEO visited this year, and when we signed up with Nitish Reddy from Cricketer for launch of the Bangalore boutique. uh, the in-house indenting inventory management system, and we had the software customized to our needs. So it's not a regular SAP that we are using, but our own system, and has been working very, very effectively since then. So it's not just in the brand inventory, but also in the service centers that we use are so as to provide a complete transparency to our customers. Our customers or our retailers can log in. They have their specific passwords. They can log in. They can check how their watch is being serviced, what is the status, and when will they be getting it. Storage and safety of the highest level, from the insurance to all kinds of compliances we have taken into account. And besides that, the integration of technology in each and every process that we follow, whether it's a activation of the warranty so that the customer gets a complete a reassured product that it can be serviced anywhere in the world. Some of the joint ventures. This is with Ethos, and I'm proud to say that when it was a time to open the India's first Hublot boutique, Ethos partnered with Luxury Time as a 50-50 joint venture, and we opened first in Mumbai. COVID hit, but today I can proudly say that we are the number one Hublot store in India. And now we have opened in Bangalore last year, October. It is still going through its motions, but I'm 100% sure it's going to come through, like how all luxury malls come through. Service expansion is what we are looking at through this JV. So Delhi and Mumbai are own service centers, but rest of the places, which could be Hyderabad, Chennai, Calcutta, Ahmedabad, Chandigarh, and the works. So that we are going to expand through this Micron Watch Services Private Limited, a joint venture with the Ethos again. We practice, not believe, we practice the boutique experiences, and that's what we bring on the table. That's the brand marketing. That's how the watches are sold, and that's how and what we are going to use in our stores as and when we get into our retail chain. Well, these are the numbers, but you are better equipped to reading them. All I can say is that we are great in what we do. And uh, just one more point I would like to highlight here. Um, Watch distribution is a starting point. But when it comes to the other segments, the margin structures are very different and much higher. So the more we expand in this area, our profitability zooms up. So having this, having the base cost with the minor increment in cost, you can increase the profitability manifold. So therefore, I'm not saying that the focus is on the other services. What I'm trying to say is that we have professional teams managing the expansion in the other services so as to boost the profit. Through this slide, all I want to show is that we are very evenly present. So even if what they call in finance hedging of risks, so even if one market goes down, the other market picks up and boosts the sales. So that's what I would like to showcase through this. But yes, Delhi and Mumbai remains the lion's share in the luxury market. This is where we are so far, and you will find a little bit up and down in the turnovers, but you will see that profitability going up, and the number of share, contribution from the top 10 customers is healthy. And well, the variances could be because of the variance in the semester basis, what goes on, what doesn't go on. But I think you would see that mostly sometimes it's good to take a step back to move faster forward. I think you are better equipped to do the research in the luxury. All I can say is India is growing at a very healthy double digit, and we we are in a unique position to exploit that growth, the growth in not just in the main metros but also in tier 2 and tier 3 cities by approaching there first and being the pioneers in setting up a expectation of luxury experiences in these markets and grow much faster. So we are poised for growth in our each and every segment that we showed earlier, which is B2B, after sales service, the tools division, and they will bring in the lion's revenue. Reason is very, very clear. And India is by and large a youthful country, and the brands that we manage are very, very youthful, very, very young brands, in the sense that the youth, they're iconic in their own field, and having a clear segmentation, they are. It's not just another dressy watch. It's a sporty watch. Some of them are distinctive in shapes. Some of them are distinctive in functionality and colors. And that's how we like to go ahead with our businesses. Something which brings in very unique experience as well as a proper segmentation. So, middle class is growing, burgeoning. In fact, their disposable incomes are growing, their aspirations are growing. So, the consciousness is growing, and with more and more people having a higher set of disposable income, they would like to go with the to access the brands that they want to have. So, well, it says it all. Some data that we picked up from the which are already available in the market. But from this, all I can say is that the short-term outlook is fabulous. The long-term outlook is even better. And add to the fact that India has gotten into a FTA with even Swiss government, even the custom duties are coming down. So therefore, better margins and better accessibility, affordability for the customers. Our stance are clear. Our stance are clear, and well, we can't say that we have all the strengths with us, but I would say that our strengths lie in exploiting the the market scenarios, the economies, and we are geared up to have a great future with the brands that we have, which is unique and very distinctive, and we are exclusive in these brands. So therefore, it's not that someone else will also be having it. It's up to us who should we go with for the retail, and when we expand, which brands do we go with for the expansion of our own retail stores. Uh, we have a wide retail network in any case, so virtually whosoever is important in the market, we are already working with them. So it's not that we have left out even a single guy who is worth doing a great job with our brands. So distribution is available. We are already there in the e-commerce space. Experience leadership. We believe in bottom-up marketing. So that means it's not just that we have the brand and then we are talking to everyone with the same language. Every market, every store is different. We have to know each and every salesperson and how they sell, how they market the brand in their respective markets. So that's what we call bottom up, because once we have those insights, we can use those insights to curate our pitch accordingly. So, as I had mentioned before, from here in B2B, we are going to expand with more stores. So, definitely, more the distribution, merrier it's going to be. But we will work only with a performing stores. It's not just any other store. We are strengthening and expanding the after-sales services capabilities into the new markets, so we can expect more turnover from that coming in. And uh, portfolio diversification is with our our average selling price growing up. Uh, it makes a great case for us to multiply the turnover. Now we're getting into our own stores, so therefore we will have our additional source of business, additional pillar coming in the form of retail. Uh, Lastly, leveraging the just a second, uh, uh, leveraging the customers basically in the newer markets through the technologies which Pawan is leading. So that will be B2B, B2C, as well as our retail stores strategies. Well, not everything can be only great. It always, even a rose comes with the thorns. So we have some weaknesses, we have some threats, but I would like to upfront answer that. So that is true in any of the retail stores, any of the retail scenarios where the brands are limited in numbers, but we are in a great position to expand. Uh, well, limited international diversification. Our role is to exploit the India market. That's what we have been agreed upon with the brands. So we are looking at Indian market, and uh, the working capital intensity is there. Yes, of course, these are high expense area, but that's a good thing as well. That creates a entry barriers for others to come in. So therefore, it will always remain rather limited. Whosoever get into this business. And concentration in metro cities, this is precisely what we are trying to solve by having our own retail stores as well as our own service centers through the JV. Grey market, I don't call it a threat at all because as the duties continue to come down, the grey market will disappear. But yes, it is there today. It is there in all the popular brands, and so everyone suffers from that. Whether it's my watch brands or the clothes that you wear or the shoes that you wear, gray market and unorganized market is always there. But that only means that the market is there to exploit and to tap. So once the cost becomes more affordable, more customers realize the importance of having a real thing rather than a fake thing. It will they will be additional markets for us. Brand termination, non-renewal risk, always there. However, I don't see any reason why a brand should terminate a contract, especially when you're doing good and you are following the brand guidelines. So therefore, it should not be a problem. I don't see a problem. Macroeconomic slowdowns. The last macroeconomic slowdown was expected through COVID. And you know what happened. During the COVID, everything bounced back with a different gusto, especially in luxury. The thinking changed. Instead of saving, people started spending on themselves. So today they like to spend on themselves. They want to have the best cars, best watches, best jewelry. They want to experience different places when they travel. They want to enjoy the hotels. So everything's going through the roof. It's not just about watches. So I don't see such macroeconomic slowdowns to hit us. However, they can always be worldwide meltdowns. They can be earthquakes. They can be pandemoniums. Yes, but those are rare. Those are rare of rare cases, and they don't impact on a long-term basis. They are very, very short-term. So for financial overview, I have with me my CFO, Kanika Gupta, and she's the one who will take us through in the financial overview.
Thank you, sir. Good day, everyone. So in FY25, if we see, we delivered strong profitable growth. Total income in FY25 was approximately 61 crores, which was up from 51 crores in FY24, almost 20% increase. Within that, if you see, revenue from operations was at 60 crores. Income in first half of the year is 25 crores. The first half of FY 25-26 is 25 crores. Now, if you go to PAT, if you go to EBITDA, the profitability you can see has scaled faster than sales. EBITDA rose to 6 crores in FY25 from 3 crores in FY24, a 100% jump. From 6% EBITDA margin in FY25, in FY24, we have scaled to almost 10% in FY25, and as you can see, our EBITDA margin in September 25 is almost 12%. PAT was 4 crores in FY25, and which is up from approximately 2 crores last year, which is 121%. which is a jump of almost 121%. PAT margin improved from 3.8% to 6.9% in FY25, and we have already achieved our PAT of 24 FY24 in first half of this year, 25-26, and it is almost 8.9% of the revenue. If we see, so can we go to the next slide, please? If we see, the return on net worth has improved from 15% in FY24 to 23% in FY25. If we compare with our peers, so if can we go to the next slide again? If we compare with our peers, you can see that we are faring better than our peer, which is a Ethos Limited, in terms of return on capital employed, return on net worth. Looking at the 2-year period, FY23 to FY25, the total income has compounded for at a CAGR of almost 7%, and our profits have compounded significantly faster because of better mix, better product mix, scale, and efficiency. Now let's look at the profit and loss account. So as you can see, our main expenditure is in purchasing of trade inventory. Rest we have already covered in the previous slides. So can we go to the balance sheet again now, please? Yeah. So now if we look at the balance sheet, so our reserves and surplus has increased in September 25 because we have issued bonus shares in this for the purposes of IPO. And our Luxury Time Limited as a standalone company is debt free. But the short-term borrowings appearing here is our share of the number in our joint venture. If we go to the asset side, the trade receivables in September 25 has increased. It is mainly because we have extended slightly longer credit cycles to our retail partners to support them. Now, I would like to request Team GYR to take you through the issue highlights.
Okay, thank you, ma'am. Good evening, all. Warm greetings from GR Capital. We are the sole book running lead manager to the issue. Promoter Ashok sir and CFO Kanika ma'am has given a very detailed view of business and financial. Let me share the issue highlights with you. So the IPO is going to open from the day after tomorrow, that is Thursday, December 4, 2025, and it will close on Monday, December 8, 2025. The lower price band for the issue is 78 and the upper price band for the issue is 82. The IPO is comprising of fresh issue of 18,28,800 equity shares amounting to 15 crore at upper price band and the offer for sale of 4,56,000 equity shares amounting to 3,74,000 at upper price band. Lot size for the issue is 1,600 equity shares. So the minimum investment would be 2 lot, that is 3,200 equity shares. Allocation to the anchor portion is 6,17,600 equity shares. The net QIB portion is 4,11,200 equity shares, and the non-institutional investor portion is 3,13,600 equity shares, and the individual investor portion is 7,28,000 equity shares. The issue is comprising of the object. Sir, can you move to the next slide, please? So the issue is comprising of the object of capex and working capital. So the company is planned to open 4 new retail stores for the watch distribution, for retail watch stores in the cities Delhi, Amritsar, Dehradun, and Indore. So now the floor is open for the question and answers.
Great. Thank you for the valuable insights. We now open the floor for question and answer session. If you have any questions, please use the raise hand feature and our management will be happy to respond. We look forward to an engaging and informative discussion. Sir, our first question is from Ms. Monica Sharma. Monica ji, please go ahead.
Hey, Monica. I think you might be mute.
Yeah, hi. Actually, I'm asking a question on behalf of I'm from her team only. Right. So, sir, wanted to understand on B2B as a whole category. So can you please elaborate more on the business point of view? So are we like manufacture the precision part for the companies like Titan and what are those things?
Okay. The B2B, what we mention is the retail stores or the chain of retail stores which are present across India. Let me give you example. If it's Delhi, we have main players like Ethos, Kapoor Watch Company, Johnson Watch Company. In Mumbai, there's a Rose. There is Art of Time. There is Time Avenue. There is Ethos again and Swiss Paradise, etc. So different markets have pre-identified retail stores which provide certain kind of environment, a luxury environment that we are looking at, which is in sync with what the brands aspire for in every retail store. So those are what we call B2B. The one that you're referring to, they are the manufacturers of watches, Titan, and a very big company and very much larger presence across India. That is not what we call a B2B.
Okay.
However, in non-watch segment, let's say tools and machines, we will call it a B2B because we are Titan happens to be one of the customer that we are supplying to.
Mm-hmm.
So retail stores are different. Uh, Tools and machinery would be different. After sales service B2B would be different. Let's say there is a Kapoor watch company who also happen to have their service center. They need to buy spare parts for Tag Heuer or Hublot because they are authorized. We have authorized them. So that is also up to us so that they deliver quality to our brands. Okay. But they would need to buy spare parts. Who will supply them? We will. So
Okay.
therefore they become our B2B partner. Okay.
Noted. Noted. So,
Okay.
so going forward, what would be the mix then? Are we going to be a B2B player or the B2C player as well? Because we have a larger chunk in the B2B side today.
Yes. Okay. Please allow me to answer that. Currently, we are more than 80% is in B2B. Okay, and which is principally B2B and watches. So if you were to combine the B2B share, including the tools, it will possibly be closer to 85%. So
Hmm.
in future, with the expansion happening in service center, as I was explaining to you in my presentation, that we want to create more opportunities to have direct to customer interactions, whether it's after sales service, which we are already expanding, and the plan is already have taken shape through our first service center in Mumbai. Joint ventures are already in place with Ethos so that we can service much larger number of watch brands, and that will be direct to customers.
Hmm.
That's one. Number two, the other area where we have not been present in, which is the retail stores, and that is going to be purely D2C. So therefore, I would like to answer your question as you will see increasing reduction of B2B format and the contribution in our business from B2B, and it will shift from B2B to D2C.
Okay, sounds good.
Yeah.
Okay. My another question on the competitive edge, that what edge that we have today over the players like Ethos, that you are mentioning this name multiple times. So how it would be difficult for Ethos to get into in the brands like that we have today?
Okay. First of all, Ethos is my partner.
Yeah, exactly.
Okay.
Yeah, you even we have a partnership with them as well, but on a
Yes.
D2C, on a D2C side, and anyway, we are going to entering this particular category too. So going forward, it would eventually become a competitor as well, right?
Uh, okay, let me explain that to you. You are talking about a clash of interest, and so therefore creating a negative environment or vibes between two partners. No, that's not the case. So as I was explaining, why we used Ethos, because Ethos is the largest stores chain of stores in India,
Hmm.
and but if you were to study Ethos, they are into luxury space. That's what their focus is on.
Yeah.
Our focus is different. We are looking at and identifying bridge to luxury. Okay, so in price terms, you can call it from 75,000 rupees to upwards of 3 lakh rupees. That's what our attempt is to focus on. And that's the reason we have chosen the marketplaces like tier 2 and tier 3 cities, because we feel those markets are now ready to emulate what the main markets have gone through during the last 20 years. So their journey has started. The people are aspirational, are having aspirations to acquire worldwide brands, and they'll be happy to spend. The spending power is there. So that's where we will be different from ethos, and there's no clash of interest. So at
Hmm.
best, I can say it is only venturing into area which is creating a uh, how do you call it? Creating a disruption in the market so that the other players do not enter. Ethos, in any case, do not have any intent to get into
Hmm.
that, to focus on that area. So therefore, it is a win-win scenario, and we are getting into a clear positioning segment which others are not as yet looking into.
Okay, so basically we have a price target of 50,000 to 3 lakh. That is the price.
That's right. That's right.
Okay, 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 noted. Okay. Another question on the average selling price, that how it has been, the trend over the last 5 years, and what where are we standing today?
With Tag Heuer, we are at 3 lakh rupees per watch. And with the increasing introduction of higher end watches, it will only move upwards. Secondly, with the Swiss franc being quite volatile vis-a-vis rupee, every year we see a 5 to 6% appreciation of Swiss franc against the rupee. So there's a natural progression, organic progression that's going to be taking place in any case, and moving up of average selling price is going to be even higher than that. So therefore, it's a good news for us from that perspective. Reduction in duty would mean a higher profitability, higher profit margin available. So therefore, it's not that we are going to pocket that as a profit, but we are going to use that additional buffer to create more sellouts. Sellouts means ultimate sale to the end customer from those stores, from the partnerships. So as that happens, partners invest, redeploy the same amount in buying more and fresher stocks. So when that happens, we generate more sales. So our profitability is linked to the profitability of a partnership. So therefore, we go all out to support that. So more marketing, more training, and more buffer being available to support in the form of incentives to many things. So that's where we are. That's where we are.
Hmm.
So we see a clear growth path from here. We don't see any lag in this pace of growth, and with our expansion plans in place in other areas, we are assured of a great pipeline. That's all I can say.
If I may ask one more question,
Please.
and like, so apart, like, is there any others optionality that we are, looking at beyond the watches in the luxury space?
I would like to answer it in a different manner. There are very quite a number of interesting areas that we have access to. We have options, and people have approached us. It could be
Mm-hmm.
anything from, well, I would not like to divulge right now. Let me keep it to myself, close to my chest. But yes, options are many. But I think the starting point of that is if you are already into retail, having a presence in retail is also one of the benchmarks of why these brands should be approaching you. And then the world should be at your feet if you have a success formula in certain segments. Uh, Many growth opportunities come naturally along with it.
Great. Great. Okay. And today, how many retail store that we have in the D2C side, and how much we intend to open in the future? Thank. That was my last.
Okay.
Hmm.
We have two D2C stores, one in Palladium Mall in Mumbai and one in Bangalore, which are super luxury watch brands. and they are mono brand boutiques operated under the joint venture with Ethos. We have a D2C e-commerce website, and that's housed with us, and we manage it ourselves. And but I must like to highlight one thing. That is a e-commerce website where we do not want to showcase ourselves as competition to our own partners. Okay, so we tend to pass on the leads to the partner stores so that better sellouts can happen and we can supply them watches and generate sales and profitability. Through these websites, we highlight the storytelling and try and convince the customers that your decision to purchase or having an interest in Tag Heuer, Bomberg, or Exaco is a very good one. But yes, if the customers are from places where the retail stores are not present, we are happy to supply them, and we have done that. In fact, just 2 days ago, the one that we supplied was in Rajkot. So
Okay.
that those are D2C stores currently, and that's what we want to correct by having our own independent retail stores in the markets. And that's what we are reaching out to you guys.
Okay. Okay. Thank you. Thank you, and
Thank
best
you.
of luck.
Thank you.
Thank you. Sir, a kind request. If we don't need the screen, kindly stop the screen share.
Okay.
And dear participants, please use the raise hand feature to ask your questions. Our next question is from Mr. Rohan Gupta.
Hey,
Rohan
Rohan.
ji, please go ahead.
Hello.
Hi, Rohan.
Yeah, hi, sir. Hi. Good evening. Sir, I
Good
had a
evening.
few questions. Firstly, wanted to understand the agreement, right, with all these four brands that we are distributing. Are these all exclusive? What is the kind of royalty we pay? What are the terms? And why, like, what kind of advantage we have that, they won't change, say our term expires after, say, 5 or 8 years, because at the moment, our retail footprint is very low, right? So, just some basic understanding firstly is around the brand and what percentage of revenue comes from each brand.
Okay. Uh, Let me answer that in a different order. Uh, our agreements are long term with these brands, and we have seen usually because when you get into an agreement, you tend to invest in that market or in that ecosystem, and the whole thing is done so that the brand flourishes. And why would brand like to change those terms of agreement which disrupts the established marketplace? So usually it doesn't happen, but yes, anything can happen in the world. Uh, I believe that if we are doing a good job in the marketplace, there's no reason for people to change. And this is how things happen in reality.
Mm.
So we don't
Right.
see any change happening there. But uh, to answer your question, our lion's share of B2B and oh, sorry, your second question was about the margin structure and the royalties that we pay.
Yeah, royalties and the term as well, right? So for instance, with Zenith, what term we have and when is it expiring? For instance,
Uh,
for all the four brands, the royalty term, the exclusivity, is it exclusive for all? And the percentage of revenue contribution from each brand.
okay. So about the agreements, they are really long term, and usually at the end of the term, when the term is coming closer, at that time it gets automatically renewed unless until somebody puts a question to it. So it's a very democratic system in the brands that they follow. But beyond that, the terms are different for different brands. I would rather reserve those terms with me because it's a trade secret, and
Okay.
different brands.
No, sir, only the royalty, like at least the royalty percentage, if we can know.
It's a significant
Is,
royalty. It's a significant royalty.
no, so is it like industry standard generally is 4 to 6%, for a consumer brand? So is it higher than that
Much
significantly or
higher.
it's
It's like an
Acha.
onion. Rohan, a luxury market is like an onion. You keep on unpeeling, you'll reach the bulb. Okay, it's like Coke. When when you start analyzing the cost of production versus what it gets sold at. So sometimes it's one has to be privy to the taxation involved. Sometimes it is the logistics involved, because these are precious products, high value products. So therefore, utmost care has to be taken to for the logistics, etc., and safeguarding it. So there's a cost element to it. There's a there's a high marketing cost, which includes the cost of training, the cost of presentation in the stores. If you walk in any of the watch stores, you'll see a branded furniture. Those branded furnitures are expensive, very expensive. Okay, so it's not just about a typical royalty. It's not royalty because there are a lot of hard work that goes in making it a success, and so every such step adds to the royalty, whether it's coming from the brand or from the people. So if it's coming from the local people like us, and so why should we pay a royalty beyond certain point to the brand? Because we are the guys who are doing it. So if it's a case of Rolex, it will follow a different royalty pattern. And through this presentation, that's the reason why I'm not disclosing the royalty percentage or the terms of a contract, because for different brands it's different actually, and that's usual with the most of the brands. Even my agreement with a retail partner, with XYZ retail partner, is going to be different from a different retailer. So, and we don't discuss that usually, because then it creates a kind of a you know imbalance.
No, but sir, where are we classifying this royalty expense, right? Because I don't find it in the P&L also. And I'll just give you a view, right? I want to understand, right, how feasible these agreements are,
Ah,
and
okay.
where the renewal could be. Because, for instance, Page Industries, right, they are exclusive for Jockey. So when I check their financials, I can see, okay, the royalty expense is around 4 to 5% of the revenue, and it shows up in the financials. So where exactly are we classifying this
Okay.
royalty
Oh,
expense?
sorry. You're looking at from the cost perspective. Okay.
Yes, yes,
For
yes.
that, you have to understand the cycle. We pick up, we buy the products ex factory, ex port in Geneva. Okay. So they got the payment. Now we do our pricing basis their international prices, and we multiply at the exchange rate factor of Indian rupee vis-a-vis Swiss franc, so that the consistency in pricing remains across the world same, and we don't lose out to, let's say, a Dubai or a US of A or Australia, any such market, because Indians travel. Okay, so
Hmm.
that's number two. So therefore we don't pay any royalty to them.
Acha, okay, understood.
We are just
So basically,
purchasing
you
the
are
product.
purchasing it from them and then selling it over here.
Exactly, because these are all imported products, they are not manufactured in India. And one of the
And
premium.
how is that like purchase price, the contract, does it mention at what markup you can sell, or
Yes.
how exactly does that work? Like, how do we
Yes.
maintain our gross margins?
uh, so we purchase it at XYZ rate. There are custom duties involved.
Hmm.
Okay, there are taxes involved.
Right.
We have our back-to-back agreements with our retailer partners of certain margin, and I'm not going to disclose that to you. And so that margin is done, and the balance, the difference, is what we operate in. Our costs come out of that, our expenses come out of that, and we create incentives to generate more sales. So it's like typical business. If you study
Right.
the distribution business, they don't pay any royalty if you are importing it. It's a royalty comes into fact if you are manufacturing in India. So you've taken a trade license, so you pay a royalty. We are not manufacturing in India.
Hmm. Yeah, understood. Okay. And are these all exclusive? Like all are exclusive distribution contracts
Yes,
with all
please.
four
These
brands?
are exclusive distribution contracts, because if that had not been the case, nobody will invest in the market.
Right.
Now,
And what would be the percentage of revenue, say, coming from Tag, coming from Zenith? A broad level, don't need exact
no,
numbers.
no, that I can tell you. I can tell you that a lion's share is coming from Tag Heuer.
Okay.
Lion's share is coming from Tag Heuer, and the second highest contributor would be our Hublot stores. Okay, and third one is going to be in Zenith. Fourth one is going to be the new micro brands that we have in Bamberg and Exactvo, because they are small. They have a much lower price point also, so their contribution will always be much smaller. However, that's the growth area that we are looking at, and they should start contributing more and more significantly. Currently, their contribution is less than 5% collectively.
Okay. Okay, understood. And for instance, tag would be say 70% plus of our total revenue.
Almost 72, 73%. Yes.
Okay. Okay, got it. And sir, on the distribution, right? So B2B is major. Now within B2B, we have mentioned multi-brand outlets, mono-brand outlets. So what would be the split between those two on the number of outlets and on the revenue share as well?
Okay. Currently, Tag Heuer is only into multi-brand outlets with partners.
Okay. Okay.
It's Hublot, which is into mono-brand stores. Zenith is all in multi-brand stores. Uh,
Acha.
so is Bomberg and Exacquo. And but that's what we want to change, and we want to get into our own retail stores. And
Yeah, understood.
there's a chance that Tag Heuer may not join in depending on the market. But if I'm opening in Delhi, they will be most keen to know the market, understand the market, because that's how even we evaluate any partner. So why should we be any different to ourselves?
Right. Okay. And these mono brand stores are what exactly? Like
If
multi-brand,
it's
we understand. Exclusive
uh,
brand outlets, we understand.
like if I were to take an example, you can have an Adidas store or you have a shoe store. Okay,
Right.
so a shoe store will have multiple brands being available. A lifestyle
Hmm.
store will have multiple brands of shoes in that. An
Yeah.
Adidas store would be a Adidas store, a single brand.
Yeah.
So a mono brand store is a single brand store, which we call in our language a boutique, if the size is good. And a multi-brand store is a where multiple brands are present, and there the tug of war is at a different level.
Okay. Okay. So mono brand store then like if it is single brand, then in how many these mono brand stores are we like present at the moment, right? Say,
Two. We are present in two monobrand stores, one in Palladium Mall, Mumbai, for Hublot.
acha. Okay.
That's since 2019. And in 2024, October, we opened one in Bangalore in Palladium Mall again, Mall of Asia.
Okay, that's again the same one. Hoglo
Yes,
only.
yes, but that's under a joint venture with Ethos.
Okay. Only the second one is under joint venture.
No,
Both
both
are under
the
joint
Hublot
venture.
stores are with the under a joint venture with Ethos.
Acha. Okay, got it. And also coming to the EBO, right? What exactly is our strategy? Like, I think you mentioned four stores in the RHP. So what
Yes.
would be the timelines? Are these all for tag? And then the locations are also mentioned.
Yeah.
And like, what kind of economics you expect? What kind of payback period? What kind of store level EBITDA you feel you can do? And when
Sure.
you'll break even on these stores?
That I can tell you. I can tell you that all of them. Usually between 9 months to 1.5 years, it should turn around and break even, because these are the markets where we will be making a pitch to the customers, and we will create our own set of databases there. Okay. So, and how we see it is in financial terms, if let's say there's a XYZ stock, number of pieces in stock, and we have a stock turn of 1.5 times, uh, so the stock becomes free in within 2 years period, and that's when the profitability simply zooms up. So anything EBITDA of anything between 12 to 22% should be a depending upon the brand, depending upon how competitive arena we are getting into. So it could be anything between 12% to 22%. So we are targeting more towards the higher area, which is between 16 and 22%. That's what our aim is, so that it starts contributing much more positively in our overall business group.
Okay. But you mentioned break even is within 6 to 18 months, right?
That's right, depending upon how uh, raw the market is, how competitive the market is, and what kind of brands we carry with us so as to make a mark in that market faster.
Okay, okay, understood. And what would be the timelines for these stores, these various like four stores?
We are
Uh,
looking at these 4 stores coming up within the 2 years' time because we want to move fast. Had it been anything slower, we could have done it from our internal accruals. That's right. It's just that we want to move fast and we want to move into the areas in the markets where we would need investments. So we thought best is to reach out, expand our family of investors, expand the family of our believers, and move ahead with the project.
okay, but sir, 2 years is like a very long timeline. So say in the next quarter, do you think why you'll open one? After a couple of quarters, you'll open another one. Just some
Let
broad
me
on
give
like,
you let me give you a sense of how what is the chronology of stores being opened. You go
yes.
ahead, identify the market. You go ahead and identify the mall. Mall
Hmm.
could be in a different stage where you want to be present in. The capex is fairly high in terms of the civil work and putting in furniture. It could be anything between the capex for civil work could be anything between 35 lakhs to 48 lakhs or 50 lakhs, and the furniture could be anything between 1 crore to 1.5 crores. So therefore, wherever you go, it will be for longer term lease period. And if you see in a market, let's say Dehradun market, Pacific Mall is still not performing, but a new mall is coming up and you would like to go there. And so you'll have to wait it out. Or you will give your intent to sign up with that mall operator so that you are assured of the footprints of the customers there. Okay, that's what you're aiming at. And it provides a nice environment for the luxury. So similarly, so you identify, you see the timelines, then you work backwards, talk to the brands, offer them the design concept. It is easily between 6 to 9 months per concept.
Hmm.
So it's
Correct.
not just a question of, oh, so and so shop is available, let's go, and from tomorrow I'll start selling. No, it's not that. So it will take time.
Okay,
And
so we have for the out of these four stores, have we identified for any? Say, for instance, Delhi, I see is one is in Punjab, one is in MP, one is in Dehradun. Have we started the process? Where are we on the process for all of these, right? On
So,
identification, taking on lease?
I would like to answer this. Rohan, we are actually looking to open one of these stores before the end of this financial year, and the next three stores we are planning to open within the next year, within the next financial year of 26-27. And yes, for the first store, we have already started the planning process, and we should be seeing at making that store operational by the end of March.
Okay, okay,
yeah,
okay, understood.
does that
And
answer your question, Rohan? But
yeah, it,
but the process has started much before. So identified it, and
hmm,
we are in the stages of finalization of the brands and brand mix and everything, so that things are proper.
okay. So, I mean, sir, where will the growth come from, right? I mean, we have been stagnating, right? On the growth front, I do not see any huge growth over the last, say, 3, 4 years. So,
Okay.
if our stores are coming up, say, it's quite a long timeline, right? We've identified just for one and it's getting done. So, where exactly is that growth kicker coming in? Right, that is first point on the revenue growth going forward,
Mhm.
and second point is on the margin. So for historically, if I look FY 23, 24, 25, our gross margin was in the 21-22% sort of range. Now in FY 25, the H1 sorry, FY 26 H1 numbers that we've given, there our gross margin has increased to 28%. So where is the sustainable gross margin, EBITDA margin, and PAT margin that you see?
Okay. Allow me to answer that. I had explained that in my presentation that there's a B2B business which delivers certain kind of margins, but and we are growing in the areas, we are expanding in the areas in other than B2B, which has a much higher margin. So as we increase our footprint in after sales service, uh, you'll be surprised. The margin is much, much better and will start having a positive impact with the much smaller investment from that perspective. Uh, 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 so after sales service is one area which we have identified, and we already have a joint venture in place, and we are scouting for newer places, finalizing the places to open the service center. And we have already opened one in Mumbai. The tools division is another one where the margin structure is much higher than the B2B margins in watches that we get. So therefore, as we increase our penetration in these through these products, through these divisions, the margins will improve significantly.
Okay, but sir, what was the reason for a margin improvement in H1? Like gross margin basis, if I look at it.
If you were to see if you decipher the sales breakup, after sales service grew, and with a higher margin, the tools division grew, and it has a significant impact in the increment in the profitability.
Acha, okay, understood. Sir, and one thing on the MBOs, right? The multi-brand ones, which
Mhm.
exact MBOs are we present in?
Which city are based in, Rohan?
I'm based out of Bombay,
Bombay. Fantastic. Where in Bombay?
Andheri.
Andheri. Okay. So
Yes.
in Thane, we are with Ethos Viviana Mall, in Viviana Mall.
Okay,
Closer to Andheri would be in Bandra, we are with Time Avenue, okay, which
okay,
is on Turner Road, and that's where our service center is also there. You must visit us, please. And
okay.
then going further in Palladium Mall, we are again with Ethos. In BKC, in Geo Drive as well as Geo Plaza, we are in Ethos multi-brand stores. In south of Mumbai, we are with Rose, which is at the old custom house next to the fort. So somewhere that where Gallery Lafayette is coming in. That the
Hmm.
whole area is developing into a huge luxury space. So
Okay,
these are the
understood.
multi-brand stores that we are present in. In Pune, if you were to go to enjoy your holidays, so in Pune we are with City Pundol, who themselves are 110 years old store in that market. Besides being present with Ethos,
Hmm.
so we are present in best of the stores that offer fantastic brand environment.
Right, understood. Okay, sir, I got a basic understand. Just last thing is on the term, right? When are the terms expiring? I mean, I know it goes for renewal, but when are the agreements expiring? Can you disclose that or say at least for tag? Is it very
Well,
soon or
I still have many years to come in tag before the term comes to an the last date when they review it. Okay,
acha?
so it is still, it's not happening this year, it's not happening next year, it's not happening day after. So
Okay,
the
so and historically, like for how long have we been associated with tag? For how many years?
uh, 2015 is when LVMH subsidiary closed down, and
Okay.
they decided to hand over the distribution to us. Since that time, it's been more than 10 years now.
Hmm.
Sorry, in January, it's going to be in 10 years. I signed the contract in 2015 September. So it's been more than
Acha.
10 years. And operation wise, it will be more than 10 years the day on 1st of January, actually.
Okay, and Ethos won't take over this, right, from us. Like they won't undercut us at the next time. Like, what is
Should
the
not.
how big is that risk?
Rohan should not, because they are my joint venture partners. They will be putting that at a jeopardy. Okay, it's highly unlikely. People don't go that. Plus, I think they don't need to. They don't need to. Their
Hmm.
focus is into retail chain. Their focus into high-end luxury. They're much happier selling Rolexes and Jacob and Cobes of the world. Okay, and that's the reason why we chose them as our Hublot joint venture partner, because they have a clear identity in selling luxury watches. So why would they get into someone else's area, shift the attention and focus and capital onto something else which is not their forte?
Hmm. So at this Hublot store, it is only tag, right? I'm assuming you're only selling tag, or which brand you're selling
No,
at
no,
Hublot?
it's Hublot. Hublot is
Acha,
a
Hublot is
brand of
the
watches.
brand.
Hublot is a
Okay.
brand of watches which is roughly it starts, our average selling price is 11 lakh rupees. It starts
Acha.
from there.
Okay. Understood. Understood. Sir, any new brands, new tie-ups we are looking at, or it will be these four only?
No, we will be constantly looking at new brands, but each brand needs certain investment in terms of time, money, as well as efforts.
Hmm.
And we had decided long back to remain lean in our team. That's how we have been profitable since day one, which even LVMH subsidiary could not be. So,
Right.
so, we are going to go slow in acquisition of the brands, but brands are coming, and that's the reason why we have highly differentiated brands like Bomberg and Exacquo. Exacquo from the shape, it looks like a melting watch. Okay, and we will only go with brands which offers exclusivity as well as some level of differentiation, which is an nothing of just a statement, but
Hmm.
with a proof. So,
Right.
so Bomberg is another brand, highly differentiated and youthful. In so we would like to go with a brands which makes an impact in the marketplace and offer something different.
Okay. And so now coming to the growth angle, lastly, like FY 23, 24, 25, and now even 26 seems to be more or less flat or in the same region. So how will we, like, where exactly will that growth come from, right? I mean, retail stores is one. Why haven't we been able to grow? Was it only working capital issue, or what exactly was the reason, right? Because there isn't even too much organic growth as such. I mean, the
Yes.
growth which came also, it was from after sales or, the smaller pieces from tools and stuff,
So
right? So,
I would like to answer that. Yeah. In terms of top line, okay. In the top line, every financial year the semesters are different. Usually, the first semester is slightly slower as compared to second semester because the marriage season, the festivals, the buying season happens during more in the second semester. Even the employees get their bonuses around Diwali time. Uh, just to highlight, I've had a record month in November. So I think the top line bit, yes, in the first semester we saw a small dip, but it's like it's like getting into the sprint mode where you are just taking a step back and moving faster forward in the second semester. But to answer your point in a different manner, it would be like this. In B2B, in the watches segment, how it is happening is that there are certain projects that which are already envisaged. The projects are already being planned and approved at the international level, at the brand level, and we are ready to supply to them. However, uh, sometimes there are some delays in the mall opening. Sometimes the fit out time takes much longer time. So it shifted from semester one to semester two. And that's why we are absolutely sure about surpassing the figure of last year.
okay. Okay. And what would be the outlook for FY 27?
Minimum double-digit growth.
Okay. And sir, something about you, like on your LinkedIn, I don't find a lot. So, how did you exactly start this? And prior to this, what exactly were you doing and stuff?
Okay, I'm very bad in PR. My own personal PR. I can do good PR for the brand, but personal wise, I've not been updating my LinkedIn profiles, etc. That much more. So on my Instagram, I'm known as a chowkidar, which is a watchman. So you can follow me. Uh, uh,
Okay.
but uh, to answer your point, I'm a brand person, and I started my journey in advertising world, and how the brands are to be created, how the brands are to be formed, and that's exactly how I actually got into the watch world. And that time the things used to be very different, and being associated in advertising agency, having access to the brand decisions because they didn't have a subsidiary, and the closest point was Singapore, and the next one was Switzerland. So I could see working on watch brands like even Omega, Rado, Tissot, even these brands which I launched in India from 98 to 2001. So I could work in a very different manner, unlike how the Indian advertising companies used to work, unlike Indian marketers were working. And it's this knowledge which helped me getting these brands, because when these brands were looking to enter into India, for instance, in 2002 it was Quorum, for in 2006 it was Ublo, before LVMH gobbled it up in later up in the decade. So so I launched these brands in India. So, and the reason why these brands chose me as their partner, because I had the ground up knowledge. So we are proud to say each one of us in Luxury Time, we follow bottom up marketing. That means not from top down, but actually being on the flow, understand how the customer reacts or consumes the communication, the presentation, teach that, train them at the store level. That's why I made a relationship with the retail stores. My team has made that relationship, and that's how we move forward. So it is a win-win scenario. It's always a partner. That's why we call them as our retailer partner, not our retailers. They are retailer partners. So, and we believe in this partnership. We live it.
Hmm. Okay.
Sometimes it can
Understood.
give us instant results. Sometimes it gives results in long term, and we are there for the long term.
Right. Understood. Okay. Okay. Uh, okay,
Anything.
sir. Thank you so much for your time and answering everything so transparently, and all the best for your IPO.
Thank you, Rohan. Thank you.
Thank you. Next question comes from Mr. Agrim. Please go ahead, Agrimji.
Yeah. Hi, Mr. Ashok. I just have a couple of questions. Most of my questions have got answered because I was late in the queue. I wanted to know, can you hear me?
Yes, Agrim, please go ahead.
Yeah, thank you. I just wanted to know how what is your inventory levels are, and in case the watch is not sold, because as you explained that you already purchased the watch and then bring it to India after paying duties, etc. So
Yes.
suppose a watch is not being sold after, let's say, 2 years, 3 years. I don't know the exact time. I want to understand from you how long you hold the inventory and what happens to the unsold inventory eventually. At what time point you decide that whether the brand takes back or you give a discount and sell, what exactly you do?
I would like to answer. In fact, very good question. This is a this is actually in line with any brand retail store, any branded marketing company. Uh, Usually, if it's within 20% of the slow movers, every presentation would have slow movers, would have fast movers. And but the fast movers also need the support of the slow movers. That's when it becomes a family of watches being showcased over there. So in our learning, it's around 20% of the slow movers, and within 20% of the slow movers, eventually after 5 years it becomes more like 30% of the 20%. So that means six units out of what you have in your stock. To give you an example, as I was telling Rohan, that we have been operating as a distributor since 2016, and we, on an average, keep 3 months of inventory with us at any given stage. Our current slow movers is less than 120 units. So I'm carrying at any given stage between 500 to 700 units, okay,
Okay.
minimum. So we being lean structure, we keep it that way, because instead of having one shipment per month, we worked out with our principals, the brands, to have multiple shipments in a month. So that the inventory carrying cost comes down, and we have constant churn of the inventory, and it goes in, goes out, and we achieve with a lesser inventory in terms of instead of 3 months of inventory, we start operating on 2 months plus. Okay, the moment that happens, profitability zooms up because the cost of money comes down, and so does become the slow movers as well as the non movers at all. But yes, there is still an accumulation. We still have around 120 units. So that's when we reach out to friends like you. So close friends and family. and we offer the benefits, the value benefit to them. Let me give you a trade secret here. As I was saying that our Swiss franc is highly volatile. So the prices go up, the exchange rate becomes different. So technically speaking, a 3-year-old watch, if I were to sell at MRP of that time, even that will offer a great value to our customers. So therefore, that value addition is passed on to the customers to friends and family. Other retail stores don't do it.
Sure. Thank you so much. I think that's clear to me. And basically, the entire inventory is basically purchased by you, so you have that inventory cost with you carrying throughout the life cycle of the watch, right?
Absolutely. Uh, uh, we had an option of going for the bonded warehouse, where we could have gone with the duty structure, being different, because I'm sorry, not duty structure, but not having to pay any duties or GST on top of it,
Yeah.
immediately. We had that option, but what we realize is that for a had the inventory been running in thousands, it makes sense, because there's an additional effort to manage it. Uh, our pitch to our retailer was very, very simple, that Tag Heuer or whatever brand that we bring in becomes a ROI brand. ROI can happen only if you are able to rotate the brand faster. To be able to rotate the brand faster, once the brand sells from their store, we should be able to replenish faster. If I don't have the control of my own inventory, I can't replenish it fast. So therefore, today you'll see my invoices going to different retailer as a single watch. I have been known as the person who can service the request from retailers the fastest, because today I get the request, I have it in my stock. Immediately they come to know that it's available in the stock. It gets blocked. It gets automated route, and the very next day or the following day, maximum in 2 days time, my retailer gets the watch. Whereas if I had gone for a bonded warehouse, it could the uh, the timeline could have extended to 15 days. So I've lost out those sales. So instead of putting pressure on the retailer, I thought, let me absorb it. And once we expand, once we go beyond 1,000 pieces, that's when we will look at that option.
Sure. Nice. Thank you for explaining that. Now,
Thank you.
next question I have is the stores which you are going to open, the new stores.
Yes.
Will they also carry watches like which are little most fast selling, like within the range of 1 lakh, like Rado, Tissot, or Seiko, and all those watches will also be there, or you will still be only the three brands which you mentioned, which you are distributor, you will
No,
only.
we are looking at 8 to 10 brands in the store, and we will plan that way exactly. And no store can survive only with the uh, highly differentiated or relatively lesser known brands. You need to have anchor brands like any other store, any other mall, any other industry. You need to have anchor brands. So our anchor brands may be different than Rado, but or it may be same depending upon the place that we have the stores in. So at with brands, it's a different level of discussions that's taking place, and we are very open, as well as we are keen to have 8 to 10 brands, not just 3 or 4.
Super. Just one final question. So, these, like, you have cracked the distributorship with Tag Heuer. Similarly, the other brands also would have long-standing relationship with their distributors. The other brands, let's say, for example, Rado, or let's say Tudor, etc. So my question is, going forward, any big brand, is there a possibility of you getting distributorship, or you would have to still go with the newer brands like the two new ones you have got?
Okay, I think that's a very interesting question. First of all the brands which were to enter into India mostly have already come in, except
Yeah.
very few, very exclusive brands uh, which can afford to supply directly to the retailer or to the end customer. They don't need a distributor, somebody in between. They
Yeah.
need they need a retail store. So, to give you an example, let's say a Patek Philippe,
Yeah.
which is number one brand in the world, is not present in India.
Correct.
Uh, Another brand, Vacheron Constantin, not available in India. Audemars Piguet, not available in India.
Yeah.
These brands are in a short supply worldwide,
Correct.
and to open a new market, invest new monies to reach out the same limited set of production schedule that they have, is it doesn't make a business sense, where they can open their own boutique, owned boutique, let's say in Singapore, Dubai, or anywhere else, where they will have full margin to themselves. And because the watches are in short supply, people will buy it. Okay, Indians travel everywhere.
Yeah.
So, my so the point I was trying to refer to was that most of the such brands are already not there in India. They don't intend to come to India anytime soon.
Okay.
Now that leaves us with a couple of options. So either we create our own segment of the brands, go with a positioning which is different and disruptive from the regular brands being available. So that means we are looking at newer markets. So when you do that, the existing retailers, the more and more watches they sell, becomes automatically my markets. That means they are the guys who will start experimenting with the newer brands. Uh,
Yeah.
Again, a case in point, I will give you cross category learning. Let's look at travel. 10 years ago, Indians used to travel to their relatives in US, UK, Singapore, maybe Hong Kong, you know. Nowadays, they want to travel to explore new areas.
Yeah.
It doesn't mean that the market has grown significantly. What it means is the customers haven't moved on. So therefore, I think when we are planning for a future, it makes great sense to go with the brands which are not just great in themselves, but also offer something disruptive features to the customer, so that customers get attracted towards it.
Okay. One final question. Are you planning to have at any time looking for a pre-owned watch sales and enter into
No,
pre-watch
no,
pre-owned watches?
no, no. I will never get into a pre-owned watches. That's not the area unless until the government changes the policy. As per the government laws, watches are they appear in certain category, which makes it difficult to have a legally cleared pre-owned watch in India. For instance, if you have actually purchased a watch, let's say a Rolex, you have purchased a watch from a authorized retailer store in India, okay,
Yeah.
and you want to sell it after 10 years, okay, uh, would you be having invoice? Chances are no. We don't even keep the invoice the very next day of the fan that or a refrigerator that we purchase. Of course, there is a warranty. Till the time the warranty is there, it's more of a digital presence, but invoice is not there. And watches being a part of the notified goods, if I'm keeping watch in my store for sale, pre-owned, then authorities have full right to ask me a question, the reason and how that watch has come into my fold. Through me, the person who sold it to me, that means I'm only creating a bad blood in the marketplace, where with the customers who will start fearing approaching me because they will have that, okay, this guy is going to divulge my name to the authorities. So it's much more of a nuisance value. We would like to avoid it at this stage.
Sure. And the brands which you are servicing in Bandra, if you can disclose which brands you are servicing?
We have LVMH brands. Typically Hublot, Tag Heuer, Zenith, uh, Louis Vuitton, Dior. Besides that, we also service Gucci. We also
Yeah.
service Gucci watches.
Yeah, you have an exclusive service for this center, or you're tied up
That's
with
right.
another
No,
service
no,
center?
we have exclusive for India for Gucci watches.
No, I'm asking the Bandra service center which you mentioned is your own exclusive, or you have kept your workers in some other service center along with that?
No, I have, that's my exclusive service center, owned and managed by Luxury Time. And these brands, for the brands that I mentioned, we have exclusive contracts for servicing.
Super. Thank you so much for answering our questions very patiently, and all the best for your IPO.
Thank you.
Thank you. Dear participants, please use the raise hand feature to ask any further questions. Uh, Rohanji, do you have any more question? Sir, we have next question from Mr. Vivek.
Hey, Vivek.
Yeah, hello. Thanks for the opportunity. I joined it a little late. Hello, am I audible?
Hey. Yes, 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 Vivek.
Yeah.
Carry on.
So I just wanted to know, like, which are the brands which we are where we have exclusive rights to sell in India and the services one by one, like the
Okay.
rights to sell. Yeah.
So, in watches, we have exclusive rights to sell in India for Tag Heuer, Zenith, Bomberg, and Exacwo. For watches that we have exclusive right in the form of a boutique is Hublot. And in services, we have all these brands that I mentioned. Besides that, there's also Graham. There's also Gucci watches that we service. Uh, Louis Vuitton as well as Dior.
Thank you. And you were saying you have a JV with Ethios. So, like, what kind of a JV? That is a JV. They are a retailer, and you are. What types are there, and
Okay.
for which
Uh,
brand?
uh, for Hublot boutiques, I have given that JV is available with Ethos. So we have done a kind of a joint venture where they provide us with the real estate and we manage the brand over there in the boutique. Okay. So the operational software, everything, etc. They provide the team, the manpower,
It is
etc.
like in a shop in a shop. It is like that.
No, it's a boutique. It's a boutique. It's like
Okay.
going into a Adidas store. It's going into a Zara store, going into a Louis Vuitton store. Everything is Louis Vuitton.
That is a JV for retail with you
That's
In
with
correct.
brand.
Can I add
Not the
so
shop.
here?
Yeah.
Yeah, so Vivek, it's a different company that we have formed with Ethos. Ethos being 50% partner or
Okay.
50% shareholder in that particular company. And in that company, we have two Hublot boutiques, as in two monobrand boutiques, which wherein we are only selling Hublot watches. And
Okay.
that company has exclusive rights to sell Hublot. Over to you, sir, now. I
Huh.
just wanted to clarify this.
So that's in the boutique form. The second joint venture that we are forming with Ethos is that is to expand the horizon of after sales service. Uh, what we realize studying the market and by being present in this market for such a long period is that people sometimes they cut corners in quality and they go to unauthorized service centers because authorized service centers need huge investment in terms of right tools, right manpower, training, upgradation of the skills, etc. So, and that manpower to skill sets were lacking in India. So, therefore, customers sometimes because of the paucity of time, sometimes to save extra money because authorized services costs quite a lot. So they have found means to go to unauthorized sources who do, and India is great in Jugaad, of course. So it happens sometimes, and that's the reason why we are expanding in services, and that is the second joint venture. So Delhi and Bombay remains with us. In other markets, we are going to go with along with Ethos, and it is entirely lock, stock, and barrel operated and managed by us because we have the skill sets Ethos doesn't. Ethos would like to offer their set of brands to us, which is multitude of higher more than 20 watches, 20 different brands. Besides, we will be offering our brands over there so that we can cut and the unauthorized servicing of luxury watches.
Mhm. So that means the Rado of the worlds will come to that.
It's going to be unlikely that Rado will come, but it's more
Who is
likely
who is doing Rado services in India? Like
they have their subsidiary available in India called Swatch,
direct.
and they have their own service center across three different locations.
Okay, so most of the luxury brands have their own service centers. You
I would
mean
say most of the luxury brands have clearly identified authorized service centers, out of which some brands are with us on exclusive basis. Some brands are available in different areas, like Rolex. They appoint their own service center, uh, uh, whosoever they are retailing with. So they give first option of opening a retail service center with them.
okay, okay, sir. Thank you, sir. Thank you. Yeah,
Anytime, Vivek.
thank you.
Thank you. And thank you all for joining us today. This concludes our session. We sincerely appreciate the management team for sharing their valuable insights, and we thank each one of you for your time and continued confidence in Luxury Time Limited. I now invite the management to share their closing remarks. Over to you, sir.
Thank you, guys. Thank you for taking out such a valuable time. For us, time is the most luxury commodity. And two oxymoronic terms I've used, luxury and commodity. No, it's not the case because we treat it as a commodity. And but we also consider time as a luxury. So invest in time. That's all I can say.